Good afternoon and welcome to our Financial Advisor Forum. I'm Greg Greenberg from The Street. And Chinese stocks have had a hard time digging their way out of the financial crisis. The S&P 500 is up 40% in the past 5 years versus a 9% loss in the MSCI China Index. My next guest, John Burke, however, says China is the right choice for investors even as U.S. stocks hit new highs. He's going to tell us why. Welcome, John.
Well, good to see you, Greg. We want to go east with our investments, Greg.
You got to tell me why, because right now everyone says it's all systems go right here in the U.S. So why do I want to yank money from the S&P 500 and put it in Chinese stocks?
Greg, I just came back from China. We're seeing signs of growth in the earnings reports, in the third quarter earnings reports. For example, Coca-Cola had 9% quarter-over-quarter sales gains in China. Then we look at DuPont and their automotive sector. DuPont had 10%. In their automotive sector relative to half that in the North America automotive sector. And then we look at Honeywell, which is showing 11% year over year. These are top line numbers, 11% year over year growth.
So you like U.S. companies or global companies that do business in China as opposed to investing directly into Chinese companies themselves, because when you listen to Carson Block, aka Muddy Waters, and the problems he's finding in things like Sino-Forest, NQ Mobile, that scares a lot of people away from Chinese stocks.
Well, the biggest problem with Chinese stocks is that most of them are state-owned enterprises, SOEs. And when they're state-owned and they're majority state-owned, there's a conflict. The state, the government, has one agenda, and of course we as investors have yet another agenda.
All right, so let's talk about some of the companies that you like and their businesses in China. First of all, General Mills. Why should investors buy General Mills to get to China?
Well, the reason we like General Mills is because of their Häagen-Dazs unit specifically in China. The Chinese consumers remember all too well the tragedy that they had with local dairy, with many babies that were killed by poisons from the local dairies. So they prefer foreign dairy. So, for example, in infant formula, Mead Johnson stock is up 6% today as a big manufacturer of infant formula in China. So we're looking at what investors may be missing here, in that Häagen-Dazs, which is the brand that General Mills of ice cream that General Mills sells in China, of course, is dairy, and they're quietly building a nice business for themselves in China.
So they trust our dairy, our food better than their own supply. What about whiskey? Now, one stock you like is Diageo. This is a global spirits seller. They drink a lot of scotch over there.
They do. Now, when we look at General Mills, it's a little expensive, so it's up close to 30% for the year. So we're trying to find some place where it might be a little bit cheaper. Diageo stock is up about 11% for the year, lagged a little bit last year. So Diageo is the world's largest spirits manufacturer. They do very well in China with Johnnie Walker, but they've done especially well the super premium whiskey called Windsor, which they built just for the Asian market. And Diageo has better sales trends, top line trends, than even General Mills.
And then finally, you like a Chinese company, Lenovo, in tech, computer manufacturer. Tell me why Lenovo.
Well, we like Lenovo as an exception to our rule because it's not a state-owned enterprise, number one. It's run by a fellow by the name of Yang Yuan Qing. His name even sounds like money, Yuan Qing. He's a brash but brilliant CEO of the company. Lenovo has top-line numbers of 17% annually over the last 3 years. The companies we're looking at have a hard time finding any top-line growth, and they're 17%. Little bit expensive on a price to cash flow basis, but we think that they have a chance to improve margins. Margins are only 2%, and as he's captured market share, we think he can start to focus on those margins.
All right, we're going to watch China. Thank you, John. And thank you for watching the Street's Financial Advisor Forum. From New York, I'm Greg Greenberg.